The first speech from Governor Malhotra after taking charge, and of course the 25 basis point rate cut came. Of course, a tweak in rates as expected, but Neeraj, no poem, no quote in the end. Just to see what the new governor's style is. I would say very to the point, very business-like, very, very specific. That Q3 numbers have come in, and business as usual, and means business.
So 25 unexpected lines. I thought, reasonably dovish, if you will. Maybe not as much, but I think our guest will be better placed. But 25 basis points was the need of the Tamana. So I think that's done. And let's see if there are any other non-policy measures taken in the run-up to March.
I would not call it dovish. I don't know. But we'll ask Katrina L. I will ask Katrina L. joining us, Director Economic Research, Moody's Analytics, and it's so great to have you on the show, Katrina, as we break down what the monetary policy is talking about. Neeraj and I, since this morning, have been debating on whether this will be dovish commentary or not, because the 25 basis point rate cut was largely expected. Would love to know your take on that and your first reactions.
Yes, I think it's a positive development that the RBI has finally decided to cut rates and deliver that 25 basis point reduction. I think what's clear is that, there's a really difficult. On the one hand, they do have, domestic demand, which does need that additional support. But on the other hand, they do have that really weak rupee that they're balancing as well. And it seems through today's decision that they are prioritizing, strengthening and working towards improving domestic demand over the next couple of months. So in terms of forward guidance, I'm not sure at this point we can be really clear of whether this was a dovish or not, because let's remember that this decision was largely anticipated by markets, and I think that the RBI is treading really carefully about any forward guidance, just because there's a whole lot of uncertainty in the external environment, particularly around tariffs and how inflationary or not they will be, and also the potential implications of that weak rupee and how that's going to feed through to domestic inflation in India. So I think they're continuing to tread really carefully and will be guided by the data, in particular the inflation data and also the growth-related data as well, to see how quickly they need to continue with this easing cycle.
Some calls to banks as well, by the way, so that was the interesting piece and watch out for. But Aditi Nayar is here. Aditi, what did you make of the policy statement? 25 basis points on expected lines. Would you call this a dovish policy, a neutral policy with a rate cut? How would you classify it, and what stood out from the statement for you?
So I definitely won't call it dovish. He did mention upside risks to inflation. I think there was a very hopeful note which was struck in a sense, talking about resilience amidst global uncertainties, etc. But it was a very pragmatic policy, and I think overall very much in line with what we were expecting, that we'll get a rate cut without any change in stance, and even towards the end, the mention that we're going to look at the outlook every single time to decide what we're going to do. I think that's absolutely the right approach. In any case, this rate cut cycle is expected to be very shallow. We're not expecting more than one more rate cut. So there's very little point actually to change the stance to accommodative. So I think it's much better that we've retained it at neutral, and this gives all the flexibility to the MPC to decide policy after policy what looks best for the Indian economy. And a couple of more points, 4.2% CPI inflation for next year, that's in line with our own estimate. And what that's basically suggesting is that neither are the tax cuts expected to be very inflationary. And while of course the upside risks to inflation were mentioned, but again, similar to our own view, that the exchange rate depreciation will have a much bigger impact on the WPI and a smaller and more lagged and delayed impact on the CPI. So while upside risks were mentioned, the CPI inflation projection actually for FY26 has been mentioned at 4.2%, which is in line with our own extant projection as well.
Aditi, hi, Tamanna here. Just wondering on what you made of the GDP forecast and the inflation forecast. They've stuck to the inflation forecast. I think GDP second quarter has been tweaked down a little. Just your reading into where Governor Malhotra thinks growth will go.
So actually, the GDP growth forecast I think is a little bit on the higher side. We are at 6.5% each for FY25 and FY26. I suppose the MPC has just taken the NSO first advanced estimate of 6.4% instead of giving a new estimate now.
Aditi, sorry, Aditi, you will have to excuse me. So sorry, I just want you to complete your statement, but we have Mr. K.K. Mistry on the phone line, so I'll have to go to him for a minute and get his view first, and then we'll continue the conversation. Mr. Mistry, thanks for joining in and taking time out. What did you make of this? Not dovish seems to be a consensus.
I think completely along expected lines that given the global economic uncertainty, the trade wars going on and all of that, the stance remains unchanged, and a 0.25% reduction in interest rates will help, hopefully help boost growth further. That coupled with the fact that existing home loan customers will get the benefit of the 25 basis points cut in rates, particularly, obviously customers who are linked to the repo rate, which is the bulk of the customers. So all in all, as expected, good policy. The stance continues unchanged, and I think we will now start seeing the growth pick up in the system.
Mr. Mistry, hi, Tamanna here. In terms of the outlook we saw from the governor, and I'm asking you this because the 25 basis point rate cut was widely expected, priced in by the market and everyone who watches this event very closely, but on the outlook of whether we will see another 25 or another 50 basis point this calendar year. What sense did you get from what Governor Malhotra was saying? And of course, his first speech was being watched very, very closely.
I think the governor said that growth is picking up in the system. He also said that the outlook on inflation is neutral. I don't think he seemed to be very worried about inflation. And if we had good monsoons next year, then I think you would see 2 more rate cuts of 25 bps each. If you don't see good monsoons, my expectation is about 25. So anything between 50 and 75 for the year would be my expectation, depending on data, depending on how things work out.
Are you in agreement with the growth outlook? Just before we came to you, sir, Aditi Nayar was giving her view that she thinks that the growth outlook is a little on the optimistic side. Are you seeing yourself signs that there would be this kind of a recovery in growth?
I think there will be a recovery. I personally think, and I may be differing from the earlier view, I think you may see even a pickup in growth beyond the 6.7% that RBI talked about for next year. You could see 6.7 probably getting closer to 6.8, or if you are lucky, maybe a little more than that. Obviously, depending upon good monsoons and the macroeconomic environment in the rest of the world not getting completely beaten down.
Mistry, would you have, considering that March is around the corner in liquidity conditions, though RBI has done enough measures, but would you have hoped for some more measures around liquidity specifically to be announced, or can they be done beyond the policy as well?
We've seen that liquidity measures are always usually announced beyond the policy. The only liquidity measure really announced in the policy is a cut in the CRR rate. We saw a cut in the CRR rate in the last policy. And therefore, I don't think one would have expected a CRR cut this time. But you saw that a couple of weeks ago, not even a couple of weeks ago, about 8-10 days ago, RBI, through these OMO operations, has injected or will be injecting a lot of liquidity into the system. This quarter also important because this is the 4th quarter and you will see the largest installment of advance tax being paid in the current quarter.
Got it. Mr. Mistry, just one last question from mine. In the 2 instances that you spoke about your constructive opinion on growth, you mentioned domestic factors completely. Could global growth worries bring a question mark to even the RBI's estimate? Forget your assessment that it could be higher as well.
Look, I think globally we are living in a world of complete uncertainty. No one knows what's going to happen 3 months, 4 months from now. We've never seen this kind of global uncertainty any time in the near future.
Right.
So global factors will affect our growth all over the world. India will be least affected. I repeat, least affected compared to any other big country, simply because our domestic economy is very strong. And the measures taken in the budget in terms of leaving money in the hands of people will push consumption. If consumption picks up, local consumption picks up, then that itself will create need for more capacity, more products being produced, and therefore more investment. So whilst there will be an effect, I still think that despite the global environment, we should still be looking at a growth maybe marginally higher than what RBI has said. Unless there is a very major global catastrophe which we can't predict, or oil prices shoot up beyond what we are expecting.
Just one last point, Mr. Mistry, are you expecting a fair enough pass-through of this rate cut? Because that always becomes a question.
I would think so. I mean, the rates, the repo rate, most of the loans are now linked to repo rate, particularly the housing loans. So there it is absolutely automatic.
Okay. Thank you so much. K.K. Mistry there on his first view on the policy. Let me come back to Aditi Nayar. And Aditi, sorry we had to interrupt you there because we just had that 2 minutes with Mr. Mistry. But do complete your point. And I think it's an important one to underscore why you think that the RBI is maybe being a little optimistic on the growth outlook.
So just to kind of go back a step, certainly we expect growth is going to rebound from the lows that we saw in Q2. There's no doubt about that. For FY25, the NSO has placed the advanced estimate at 6.4%, which the MPC has probably taken as a given right now. And that's what they normally do. Then they don't give a fresh estimate of their own for the current year once the advanced estimate is there. So on 6.4%, they've indicated a 6.7% growth for next year. Our house view at ICRA baseline view is 6.5% each for both these years. So that's why I'm saying they're a tad higher than where we are. And at 6.7%, they're actually quite close to the upper end of the Eco Survey's 6.3 to 6.8% range as well. Domestic demand is recovering. Rural is expected to be better, much steadier this year. Urban demand should also recover, particularly the unevenness that we saw at the middle and the bottom of the pyramid. That should recover post the budget based on both the tax cuts, which will help part of the urban economy, and all the other measures as well, which we think will also be supportive. But it will mainly be domestic demand and the government capex, which is going to drive growth. We hope private capex will come back stronger in FY26. But that really remains to be seen. Does it continue at the modest sort of pace that we're seeing right now, or does it amp up substantially? Given the kind of global uncertainties that we have that are going to have an impact on merchandise exports. How soon will we really know what is the exact tariff implication on India vis-a-vis other countries? That's very important. Do we end up getting bucketed with the BRICS? Do we escape that? Do we have any tariffs imposed on Indian exports at all? Are they less or more or equal to other countries? There are too many unknowns. So we don't really expect merchandise exports to be a driver of growth. As of now, services exports are still doing very well. So that is something that will continue to be supportive.
Got it. Okay. Well, Katrina, Aditi, please stay on. We've got a battery of other guests joining in as well. And two people who got it absolutely right. Jaideepa had spoken about this way back, that maybe some liquidity measures first and then a rate cut in February. It's come out. Jayesh Mehta 3 days ago joined us, spoke about the crossing fingers of a rate cut coming through, and that has come through. So both of you would be happy. Jayesh, I'll start with you. Is this coming exactly with what you anticipated, or would you have hoped for something more in the policy?
No, that's exactly as anticipated. And in fact, one more change, I would say, if you really look at the MPC policy, when we say flexible inflation targeting policy, that was supposed to be flexible. That doesn't mean that we have to go to 4. If your real rate is too high, even at 5%, if the real rate is too high and the growth is struggling, you have room to cut rate, and which is what they have done this time around. And that's why I actually look at it, there is more scope, because if you look at one more thing he also said is forward looking, right? So if you look at their inflation projection for the next year, and if nothing changes in April policies, we can actually see, further rate cut because even at 6th quarter, and if you look at the projection of around 4.2, we are at 2%, almost 2% real rate, right? And therefore, there is enough room to cut that rate and no need to wait for 4% to come through.
Got it.
That's a big highlight.
Yeah, well, it certainly is. Okay, so that's Jayesh's take, and I'm sure, more questions for our panelists, but quickly getting a take from Vishwanath Nayar, our banking editor, who's right there at the RBI headquarters. Wish you got the chance to read the whole statement as well. Quick takeaways.
quick takeaway, the last bit that the RBI governor said right before he left the room was less restrictive monetary policy was warranted. That's what the MPC felt. And while he said that for future policies we will take a fresh look at data and then decide what we want to do in the upcoming policies, but this was a clear indication according to me that there is a likelihood of a sort of a dovish stance coming in from the Reserve Bank governor on future rate actions. Another important point, and this is something I want to ask Jaideep Iyer at RBL Bank as well, he's pointing out specifically to banks saying that you're parking too much money with the RBI passively and that you should use that, participate in the call money market and on-lend it to other lenders. I want to ask Jaideep, is that in your view a significant problem at this point in time, and maybe some of the liquidity issues that the banking system is facing could be resolved partly through the system itself redistributing that liquidity?
Hi, morning everyone. Thanks, Krishna. I think honestly, I don't think call money is a big issue from a banking sector standpoint. I think generally we've seen very less demand in call money because it is generally not being considered good for banks to borrow in call money, and therefore there is no demand, and therefore even the lending doesn't really happen. So at one point in time, several years back, the call money market was a fairly large market, and I think it's now fairly insignificant and irrelevant because it's also associated with a little bit of let's say negative liquidity scenario at a specific bank level, and therefore banks have generally avoided taking access to call money markets in general.
Okay. Okay. Yeah. Okay. We'll come back to Vishy for more on this. Alok Singh also joining in Treasury Head CSB Bank. Mr. Singh, thank you so much for speaking with us. Just your first take on the policy and the outlook. Before the policy announcement, everyone was very sure about 25 basis points, and then there was a varied view on whether 50 to 75 this calendar year. Just wondering if you have rejigged your assessment for rate cuts as a total this calendar year after listening to the governor.
Yeah, good morning and thank you. So I believe my outlook on policy is that it was a very balanced view given the conditions prevailing, especially in the dollar-rupee market. So dollar-rupee, if you see, has depreciated by more than 3%, I think, in the last couple of months, which is a significant move. And that is inflationary as well. So 25 was factored in, and I believe that the statements hinge towards the dovish, and we believe in the policy stance for the economy. We believe that the liquidity and the rates work hand in hand. You cannot. So RBI has already started addressing the liquidity conditions. You have seen the announcements in the last couple of weeks, and they have given the cut now. But having said that, I still believe that going forward, the rates cut are embedded. They will come. But looking at US scenario, how the rate scenario is panning out, where it's believed that they will hold for some more time. And similarly, even the Bank of England spoke yesterday. So we will have to look at a global perspective as well. And looking at that, keeping the neutral stance, and then probably taking a better call in April would be more prudent. And I believe that at least 2 rate cuts are more there in the policy stance in the next 1 year.
Okay. Katrina, coming on this, I mean, BOE sounding a bit dovish, Bank of Mexico sounding dovish. The government has given that 4.4% fiscal deficit target as well. Does it embolden the RBI to do more? Let's say a couple of rate cuts more. And where are you on the growth argument here? Mr. K.K. Mistry said that he believes that the RBI's number may be a bit conservative. Aditi disagrees, of course, and with her reasons. What is your reason? Or what is your assessment?
So our expectation is that we will see growth actually not pick up as optimistically as what the RBI is expecting. We're looking at about a 6.4% GDP growth rate. I think it's going to be like quite a difficult operating environment. We know the challenges about exports, but of course exports aren't that key economic driver for India. It's more about what's happening domestically, and I think 125 basis point cut doesn't materially change the game at this point. I mean, sure, we do have a bit more fiscal support coming on board, particularly from April, around those adjustments for middle-income households, but I think it's still going to be a challenging environment as well. And I think one thing and one area that, we don't pay enough attention to as we should is that, labour supply overseas and that flow through to remittances and then that impact on private consumption. I mean, if we do see a material pullback in labour supply of overseas workers in the US, then that could actually flow through to a weaker consumption picture as well in India. And of course, consumption is such a critical driver of the economy. So I think that's a risk that is quite frankly, flying under the radar at this point that we need to pay really close attention to. And I think in terms of how much more the RBI is going to move, I don't think we're going to see as much movement as what we've seen from other central banks like the ECB, the Fed, the Bank of England. I think they're going to tread a lot more carefully because the one complicating factor for the RBI when it comes to easing policy that these other central banks don't have as much is around the currency. And because we do have such a weak rupee, that potential flow through to imported inflation is a concern. And I think one thing as well that we need to keep a close watch on is, energy prices are low at the moment, but if we do get a resurgence at the same time that the rupee is extremely weak, then that's going to be particularly troublesome for an economy like India. So I think we're not going to see much more cuts. I think it's going to be a shallow easing cycle this year, which really does limit the revival in domestic demand that we will see as a consequence of that.
I want to get Aditi's view on this. What next? Because even from a market's perspective, we're now looking at what is the quantum of rate cuts that can be expected. And I agree with you when you say that the governor was very clear in pointing out potential trouble on the horizon, whether it's geopolitical or otherwise. Are you still penciling in, or are you penciling in 2 more rate cuts? And what is the quantum you're seeing this year?
We're penciling in 1 more rate cut.
Okay.
That's what we were penciling in before today as well. Quite frankly, if we were to be looking at 2 more rate cuts, then I think they would have changed the stance to accommodative. I'm not sure they would have continued with the neutral stance if they were going to be considering 2 rate cuts going forward. And that's why I think sticking with a neutral stance makes sense in this situation where if you're only going to cut rates 1 more time, why would you have moved to accommodative? And I know I said it before, I'm going to say it again, the focus on the upside risk to inflation, I think that's another hint that they're not looking at too many rate cuts going ahead.
But Jayesh, come in please on that. The RBI unequivocally saying that we will take every quarter, assess the data, so on and so forth. If the monsoons are good, so and food inflation does get under control, does it open up the door, or are you also of the camp that it's probably just at best 1 more rate cut? Plus, couple it up, Jayesh, with what do you think is the bond yield trajectory for the near term? How do money markets see this policy and the upcoming belief about the policy?
So I think firstly answering the same as Aditi said, neutral means maybe 1 more rate cut. That's what the bond market thinks. Of course, I do have a slightly different view. In this uncertainty world, right, you can't give any directional stance on the policy, and that's why it's neutral. You want to be flexible within 15 days, even before next policy, if something happens, they want that flexibility. And that's why I would emphasize that neutral means something which is the global uncertainty. That's why it's a neutral stance and not on either way. Coming back to further rate cut trajectory, I do believe there is room to go, maybe more than 1 rate cut, maybe 2 rate cuts. Assuming, see, as of today, we are looking at as of today, and even RBI is looking at as of today. That's why the neutral stance, because we don't know what happens in 15 days or next 30 days. So much of uncertainty in the world. But assuming their projection, which is there, nothing changes dramatically in next policy or next 2 policies, we will see rate cuts because if you really look at the growth projection has been reduced, inflation at 4.2 for next year gives almost 200 basis point real rate. Like, when your growth is lower, you can't have such a high real rate. Like, there was a time we were focused on 1% real rate, and right now we are, last 1 year we have been at 2% real rate. So I think when the growth slows down, is how to make sure the real rate also comes down. And that's where I see more room for them to cut, assuming that their inflation trajectory and their inflation projection pans out the way they have projected. Maybe 10, 15 basis point doesn't matter, but along that line, it should not be that 4.2 becomes like, in next policy, the projection becomes maybe 5% or 5.5%. That is a different situation. So looking at the current scenario, there is enough room for rate cut further.
Mr. Mehta, I just wanted to get your take on the governor's comments on the currency. And he started by saying that there is a lot of commentary on the RBI's positioning on the currency. He goes and he took pains to say that we don't take any steps to intervene on the rupee vis-a-vis any other particular currency. What is your take on what you made of his comments on the currency and any cues from there on what the RBI's approach is going to be to a weakening rupee?
So I would say this is going back to the old RBI. There was some difference in the last couple of years, but it's the old RBI where currency, they were never targeting a rate, but it was more like targeting the volatility, right? If there's a large move, definitely they need to come in and intervene, and that's what they were doing. I think last 1 month they changed that situation, and even volatility is relative, right? Like, if the world has moved only by, I'm giving a very hypothetical number just to give an example. If the world has moved by 2% and if we move by 2%, that's fine. But if the world has moved by 0.2% and we are moving by 2%, that's excessive volatility. So that's how, as compared to the global currency movement, if we move in the same similar trajectory, they should be okay with that volatility. It's only when our currency has a dramatic difference as compared to the volatility of the world, they definitely intervene. So they are not targeting. Earlier the market was very sure there was this 84 buffer, then 84.50 break, 85.50 break. So there was this number, I never understood why that number thing, right? But there was always this number, 87, 87.50. So people were trying to do that. Now they are, beyond that, it's just compared to how the global currencies move, and then if that moves dramatically, we are okay to move dramatically. So that's the way I would look at it.
Yeah, well, maybe if the Chinese yuan is depreciating consistently, how can maybe the rupee not? But interesting point, Jayesh. Jaideep Iyer, we asked you a specific question around liquidity, but the overall budget, overall policy view, Jaideep, what do you make of the statements coming out, and do you reckon that again, a view around whether it's 2 or 1 or none?
Honestly, there is more than, I think, future rate cuts. As we discussed earlier, I was at least happy that the liquidity measures came first and then we've had a rate cut. In a normal environment, I would have expected and wished for more liquidity measures, more durable liquidity measures before rate cuts, because everybody would know that this is the first time where we have an externally benchmarked loan book for banks, largely on Repo. And we have seen the first down cycle in rates. This is the first time after the regime change of externally benchmarked rates. So it's, and we've not seen deposit rates materially come down. So it's, from a pure banking standpoint, we would really prefer easy liquidity and therefore deposit rates at least directionally coming down before there are multiple rate cuts. So right now, given the circumstances of a relatively challenging macroeconomic environment, dollar rupee issues, uncertain geopolitical environment, I think this is the best we could get. But in a more stable environment, my wish would have been higher. So that's one. The second interesting point that I noticed was that the governor did mention the cost of stability, the cost of regulations, and I think this is the first time, at least I would want to interpret this statement positively from a banking standpoint, that that the regulator does, the RBI does recognize that there are significant costs attached to high regulations which the banks have seen over the last few years, and maybe optimistically one could therefore expect some moderation in the pace at which regulations have come.
Okay. Thank you so much to all of you for joining us today on our wrap-up and our assessment of the policy. No harm done. I think that's one big takeaway. 25 basis point rate cut as expected. A careful and very nuanced commentary on the outlook from Governor Malhotra, and also sets the stage of what to expect, that this RBI, the Reserve Bank, will be completely open to all kind of headwinds and threats on the horizon, if any, quick to react as and when they need to, but nothing to be alarmed about right now.
Yep, that's the long and short of it. With that, it's a wrap on this coverage of the RBI Monetary Policy Committee decision. Of course, the presser comes in at 12, and you might want to tune in for that as well. But up next, we get some of your queries answered with regards to the markets, which are doing okay.